Good morning, everyone. Basically, over the next couple webinars, today and tomorrow, we're going to cover some very basic finance topics. The material itself is not complicated. It's not technical. Hopefully, it's informative, and you will basically take away some day-to-day knowledge that you will use basically going forward. Today, we're going to cover four basic topics. We're going to talk about bank accounts. We're going to talk about credit cards, payday loans, and credit score. And like I said, hopefully you'll learn something, and maybe some of the older people watching might learn something as well. There we go. I just had to find the right button. Just a little bit about myself before we get started. My name is Peter Smith. I am a CPA, chartered professional accountant. I've had 35 years of public practice experience, a lot of that with First Nations and First Nations organizations, and 20 years as a partner in a national accounting firm. Our first topic, bank accounts. Again, very basic. Most of you probably have bank accounts already set up, but for the few of you that may not, we should probably go through some of the basics. Reasons to have a bank account: your money is safe. All bank accounts are insured by the CDIC, Canadian Deposit Insurance Corporation, up to $100,000. So if you put money in the bank and that bank goes belly up, they will insure it up to $100,000, and you will most likely get all your money back. With the bank account, there's no check cashing fees. We're going to get into it a bit further later on when we talk about payday loan services, but with a bank account, normally you don't have to pay to cash any checks. A bank account gives you debit cards, which is very convenient. It gives you fraud protection. If something goes wrong and someone hacks into your account, the bank will come good with it. It gives you proof of payment. It allows you to show something to somebody saying, yes, I did pay you. There it is, right there in the bank account. And it keeps track of how much money you have, which is always good. Now, for the people on this webinar, the type of bank account is very basic. In most cases, you should be looking at a basic savings account. A lot of bank accounts allow you to write checks, but in most cases, students don't require that option. So all you're really looking at is the last three bullets. You want to transfer money, you want to make automatic withdrawals and deposits, and you want to be able to go to the ATM. And all of those things can be done with a basic savings account. Now, unfortunately, the banks have to make money too. So there is fees attached to any type of transaction that you partake in at the bank. You've got ATM fees. Normally, if you use the ATM that belongs to your bank, there is no fees attached to it. But if you're using other ATMs, there's always a fee. And they usually forewarn you before you take the money out, saying that they're going to charge you $2.50 or $3.50, or I've seen as high as $5 to take money out. You want to try to avoid those. Sometimes there's transaction fees for money in and out of your account, but usually the bank allows you a certain number of transactions before they get into that. NSF fees only applies to checking accounts, so probably not applicable to most of the people watching this webinar. NSF stands for non-sufficient funds. And if you write a check and it bounces, the bank will charge you. And those NSF fees are not cheap. I've seen as low as $10 and as high as $50. So it is substantial. And then there's overdraft fees and overdraft interest. If you do go over your limit or go into the hole with your bank account, they will charge you for that as well. So you want to try to avoid that wherever possible. Now, probably 20 or 30 years ago, especially people in remote communities always said, I don't need a bank account because I can't get to the bank. I can't deposit a check unless I go take a plane to Sioux Lookout. But those days are over because now there's online or mobile banking where you can basically do your banking whenever and wherever you want. All you really have to do is log into your website or log into the bank website using your computer, your tablet, your mobile device, and do your banking from there. So it becomes very, very, very easy to do just about anything. You can make e-transfers. You can deposit checks using the bank app. The checks are actually quite neat because if you have the bank app, you more or less just take a picture of the front of the check and the back of the check, press deposit, and it's there. It's in your bank account. There's no need to bring that check to the bank. It's very slick and quick. And of course, there's always direct deposit. Now, most employers, if you do have a job, most employers will actually require you to have a bank account to so they can direct deposit your paychecks. You don't have to get a paycheck and bring it somewhere to cash it. They will put it directly into your bank account. So like I said, most employers actually require that nowadays. So that in itself forces people to get bank accounts. But at the same time, you can also set up direct deposit for almost any kind of check. If you're getting student assistance checks and you're going to university or college, those can be direct deposited into your bank account. If you're getting government deposits such as GST rebates or client incentive rebates, whatever the case may be, child tax credits, those can all be direct deposited into your bank account. So there's again, there's no reason to actually walk into a physical bank because everything can be done online. And as far as opening a bank account, it's really easy. It's really easy. Anyone in Canada can open a bank account. If you're under 18, you may need the assistance of your parents to open a bank account. But all you need at the end of the day is just some identification, a health card, a driver's license, a status card. All of these types of things are good identification. And with that identification, you can basically go in and set something up. It's very painless. It doesn't take a whole lot to open up a bank account. And remember, you do want to get the best bank account for your needs. And in most cases, it'll probably be just a regular savings account. So that was bank accounts. Again, just a quick overview for the few of you that may not already have one, but I'm assuming that most probably do. Now we're going to move on to credit cards. And the first slide is basically credit card essentials, just to give you a basic idea of what credit cards are and how they actually operate. Again, most of you know this information, but it's just a nice refresher. And a few things may pop out, things that you may not have realized. All credit cards have spending limits. Almost all credit cards have spending limits. That spending limit could range anywhere from 500 to 5,000 or 10,000. There is the odd one that doesn't have any limits, but we're not going to worry about those right now. All credits have interest rates or interest that they charge, and that interest rate can be anywhere from 12% to 28%. Most of what you're going to see is probably going to be in that 28% range. There's always promotions out there that allow you a credit card at 0% for 3 months or 9.9% at 3 months. But after that, it will bounce right back up to that 28%. So keep that in mind, because 28% is a lot of money. All credit cards have a minimum monthly payment. And that payment is not optional. It's a payment that you have to make. You are legally obligated to make. And it's calculated based on the amount that you actually have outstanding on that credit card. But like I said, it's not optional, and it does have to be made. If it's not made, it's going to affect your credit score. And that credit score is it's something that we're going to talk about later on in the presentation. And the last bullet on this slide, in addition to interest, credit card companies can charge you additional fees, such as late payment fees, annual administration fees, membership fees. There's lots of stuff out there that they can charge you. So when you do apply for these credit cards, be aware of all of the charges that they may have in addition to the interest that they charge you. Now, credit cards themselves could be good. They could be a very good financial tool. It allows you flexibility in your spending. Sometimes it actually saves you money if you have that. If that pair of jeans that you want is on sale 50% off this week, but not next week, but you get paid next week, you can put it on your credit card this week and pay it off next week, and you've actually saved money. Credit cards are very good for emergencies. Keeping in mind that it's only good for an emergency if you haven't maxed out on your credit card. So you do have to make sure that there's room available for those things. If you get stuck on the side of the road, or and you need a tow, or if you get stuck in an airport and you need a hotel room, you will need a credit card. So it is good for those situations. I know that a lot of students going off to university and college will get a credit card for emergency purposes. Again, credit cards are very convenient. Like bank accounts, the bank will protect you from fraudulent charges. If someone hacks into your credit card and maxes it out, it's just a matter of giving the credit card company a call, and after a few questions, they will normally reverse all of those charges. And the last bullet, it builds a credit rating. And when we get into that section, you can we'll explain exactly how important it is to have a good credit rating. Now, a lot of people say, well, I can't get a credit card. I don't know why. And there's usually a number of different reasons why you may not be able to get a credit card, but most of them are things that you can rectify. Usually if you're under 18, because you're not at age to contract, credit card companies won't give you a credit card unless you're co-signed through a parent. A credit card company will not give you a credit card if you have too much other debt. If they feel that you're already maxed out and you won't be able to make the payments, they're not going to give you a credit card. Most times you do need some sort of income in order to qualify for a credit card. There is a few student credit cards out there that don't require income, but at the same time, the majority of them require some sort of income in order to basically be successful in any application. The credit score is too low. Again, those words are coming up again and again, and we'll talk about that when we get to that section. Or if you don't have a social insurance number. Most credit card applications usually start with a social insurance number, and if you don't have that, you don't necessarily have an entity in the government's mind. So you do have to have your social insurance number in order to apply for these credit cards. So that was a bit. I know we're going very quickly through these things, but again, I just want to make sure that people are picking up a few points on each one of these sections to take back and hopefully remember going forward. This next section, payday loans and check cashing establishments. we've all seen these outfits, places like Cash Money or Money Mart. They're popping up all over the place. No one will admit to ever going to one of these places, but yet they're thriving, which means that there is a lot of people using them. And basically what they do for a payday loan is it's a short-term loan provided by companies such as those. And it's used by borrowers when cash is needed fast. So basically they thrive on the people that are in need, the people that need cash right away in order to pay their rent or whatever the case may be. And basically, as the title says, it's a payday loan, which means that the borrowers have to pay the money back when they receive their paycheck. And when they pay it back, then they pay it back with all the fees and rates and everything else attached to it. So it's supposed to be a quick fix, but sometimes it's not. And as far as payday loans are concerned, they're very, very easy to get. There's no credit check involved. They basically just ask you for proof of identity, and will also ask you for proof of income. Again, it's a payday loan, therefore they're basing their loan application on the fact that you will get paid. And they usually ask for some bank information because they have to know where to take the money from when the loan comes due. And then once they have that information, they give you the money. They can give it to you in cash, or they can put it into your bank account. But it's a very simple process, and it's simple for a reason. And that reason is that they charge you an arm and a leg for this stuff. And at the end of the process, basically what they do is they get you to sign a pre-authorization debit form. And all that really does is allows them to take the money right out of your bank account when the loan is due in a couple of weeks or a month or whatever the case may be. So for them, it's there's very, very little risk from their perspective, because they've got an authorization to take the money out as soon as it arrives in your bank account. Now, having said all of that, you should avoid payday loans at all costs. Payday loans are evil at the end of the day. You do not want to go there. They have extremely high interest rates. And over and above that, they might have additional fees if you don't pay back a payday loan by the due date. If you have trouble paying it, they'll sign you up again, but you don't want to get into that cycle. And over and above that, your bank may charge you fees, especially if the money isn't there when the payday loan company is asking for it. So you get charged every which way. And just to give you an example of how much all of this costs you, we've got a bit of an example. It's about halfway down the page here. If you have a payday loan of $500 and the fee for that loan is $15 per 100, and that's the way they normally advertise these loans. It's so many dollars per 100. And so in this case, if you've got a $500 loan and $15 per 100, the payday loan is costing you $75. So when you receive the $500, you'll receive the $500 when you get the loan application, and when they take the money out of your bank account, they're going to take out $575. And at the end of the day, you might say, well, it was an emergency, not a big deal. I'll pay the $75. I'll get my $500, and it'll be fine. But that's not normally what happens. What normally happens is payday comes around and you've got another emergency, or if you haven't got enough money to pay the payday loan and all of your bills. So it just keeps on turning over and turning over and turning over. And if you take away anything from this presentation, take away that last line on this slide. If you're unable to pay the loan by the due date and carry it forward for a whole year, the interest charged is 391%. It's crazy. So for that $500 loan, you're paying $1,955 over and above the $500. So you're actually paying $2,455 for that loan for 1 year. So that in itself should scare people away from looking at these loans, because when you go in there and apply for these loans, they never tell you these numbers. It's in the fine print, of course, but they never tell you these numbers. They more or less just say, well, it's just $15 per 100 and everything is fine. But no, it's not. So stay away from these wherever possible. And the same with cash checking establishments. They're basically the same outfits. They're places like Cash Money or Money Mart, where they will allow people without a bank account to cash checks. And they'll charge you a fee along with interest, and you go on your merry way. But but if you have a bank account, you don't have to pay these fees, because your bank will cash all of these checks without any charge, or at a minimum something far less than what these places cost. Now, again, here's an example. We have you're cashing a check for $200, and the fee for cashing the check is $4, and then they charge you an extra 3% over and above that. So at the end of the day, when you do all of the math, you're paying $10 to cash a check for $200. And again, at that instant, you'll say it's not a big deal, it's just $10. But if you use that service for 20 checks, you've actually given away a full paycheck to these outfits for basically just cashing your checks, when you could have had a bank account that would do it for nothing. So again, try and stay away from these as much as possible. Last topic, credit score. We've talked about it a little bit in the previous slides, but credit score is, well, everyone has seen the advertisements on TV, Credit Karma and stuff like that, where they say you can go online and check your credit score for free and see where you're at. And some of you may say, well, what's the big deal? Do I really have to have a good credit score? Is it the end of the world? And unfortunately, sometimes it is. What is a credit score? A credit score is a personal credit report card. And it's a score between 300 and 900. I don't know where they get the scale from, but that's the numbers that they use. If you have a score of 800, you have excellent credit. 740 to 800, you've got very good credit. 670 to 740, you have just good credit. 580 to 670 fair credit, and 300 to 580 poor credit. If you're anywhere in those last two categories, you are going to have problems trying to apply for a loan or a credit card. Anything above that, you're probably okay. Now, these credit scores are developed by a couple companies in Canada. They're developed by places like Equifax or TransUnion. And what these corporations do is they pull information from all kinds of different sources, and they gather information from credit card companies, from banks, and put it all together and basically give you a report card. It's like the last slide says, or the last dot says, it calculates how well you manage your money. And banks and credit card companies use that to determine whether or not you have good credit and whether or not they should give you a credit card or a loan. So at the end of the day, it is very, very important. And this slide says, why is a credit score important? It affects the ability to get a loan. It affects your ability to get a credit card. It determines the interest rate you will pay. If you have a high credit score, you may get a lower interest rate. If you have a low credit score, you may be paying 30% on that car loan. So it does make a big difference. And it affects the amount you can borrow. If your credit score is high, that means you have capacity to take on some more debt, and they may be able to help you. Otherwise, it's not. And there's a lot of things that affect your credit score, and most of them are negative. Just going down this list, have you made all your loan and credit card payments on time? If you miss just one loan payment or a couple credit card payments, your credit score will go down significantly. Are you maxing out your credit cards? If you're always at the max, that's going to affect your credit score and it will go down. Have you ever been sent to collections? That's a definite no-no. If you have been sent to collections, that record is with the with your credit score, and that in itself will significantly reduce the amount or your credit score. Even the number of credit applications you made. If you go online and apply for 100 credit cards, each one of those is recorded, and your credit score will actually go down if you've made too many credit applications, because the credit companies are thinking, well, maybe this person is a little bit anxious and is trying everything, well, basically everything to try and get credit. Your age. I know it's not fair, but your age will affect your credit score simply because the older you have, the more history you have. The more chance you have to build up that credit score. If you have a long history of good credit, then that's going to be to your advantage. Whereas the opposite is also true. If you're only 18 years old and you have very little history, then you're probably going to see a lower credit score and until such time that you do have history. And then finally, the actual number of accounts and loans you have. If you have too many loans outstanding, then that's going to affect your credit, and your credit score is probably going to go down. So at the end of the day, credit scores do affect you. If you cannot get that car because nobody will lend you the money. If you have a bad credit score, you may not be able to travel without a credit card. And if your credit score basically says that you can't get a credit card, then you may not be able to travel, because travel requires credit cards nowadays. If you go to a hotel, there's a lot of hotels that do not accept cash anymore, and you have to use a credit card. If you're booking travel online, you will need a credit card. So all of those things are important in order to basically get around. Cash is not king anymore. You need credit. And if you have a poor credit score, again, you may be forced to use these payday loan services and check cashing services, and you do not want to go there. They are, like I said, evil, and they're the last resort for everybody. So stay away from those as much as possible. So basically, you might ask, well, how do I build up a credit score? I'm only 17 years old and I have no credit, and I really don't know where to start. And you basically start by opening a bank account. as soon as you open a bank account, you have an identity in the financial world, and that is a good start. When you're able, you apply for a low frills, low limit credit card. And you don't want to get into a lot of the fancy credit cards with the extra fees and all of the bonuses and rewards and stuff like that. No, you just want low frills, low cost credit cards. Even if your first loan is co-signed, that's going to help your credit score. Because you are the person paying it back, therefore it will help your credit score to have a co-signed loan. So that in itself helps. And at the end of the day, if you make all your payments and keep your credit card balances low, your credit score will go up slowly but surely. It's very, very easy to bring that credit score down by missing a few payments, and it's very, very hard to basically bring it up. So you do want to avoid everything that's going to bring it down. So what we've done is we've gone through a lot of stuff in the last half an hour. We just want to summarize and give you a top 10 takeaways, things that you might want to take away from this this presentation. Number one, everybody should have a bank account. There's no reason why you shouldn't have a bank account in today's day and age. Number two, make sure all your payments are made on time. We're talking about loans and credit cards, because your credit score will go down very fast if you miss a few payments, and it would take you 10 times as long to regain that credit score. So you want to make sure you have all your payments in line. One thing that we didn't talk about, but credit cards charge interest from the moment you take out a cash advance. One of the options on a credit card is to take out a cash advance. It's never recommended because you will be charged that 28% or whatever the interest rate is the moment you take out that cash advance. Whereas if you're just purchasing something at a store, you normally have until the next statement date in order to make your payment, and there is no interest charges. So do remember that if you are taking cash advances on the credit card, they will charge you right from day one. As we talked about, if you are going to apply for a credit card, just apply for a no frills credit card. That's basically your best bet, just to start building your credit rating. Number five, interest on a payday loan rolled over for a year is 391%. If you take away anything from this presentation, remember that, 391%. Number six, always look when you tap. It's something that we're all guilty of, and it's something that we should all try to avoid. When you go to the convenience store and you buy a bunch of stuff and you tap and walk away, sometimes you don't even know what you spent because you didn't look. And I'm guilty of that as well. Always look when you tap so you know exactly how much you're spending. Number seven, credit scores go down fast and up slow. Like we had said before, if you miss a couple payments on a credit card, that credit score will go down very fast. But it may take you 2 years to build it back up again. So it does go down fast and up slow. Cash is no longer king. We touched on that. You do need credit. You do need credit cards in today's day and age. Sometimes cash is not an option anymore. Number nine, credit score is usually the number one reason you can't get a loan. That's the first thing that the banks will look at. That's the first thing that the credit card companies will look at. So you do have to have a half decent credit score in order to even apply for some of these things. And number 10 is more on tomorrow's webinar where we're talking about savings, but at the end of the day, you always want to have some money put aside, because saving for a rainy day is necessary because stuff happens. You just want to be safe all the time, and you don't want to be in a situation where you have to go to a payday loan service. If you have that rainy day fund, it's always a good thing. So that is all for me.